Hello and welcome to the Counterpoint podcast. I'm your host, Peter Richardson, and I'm joined today by Aman Madok, who's one of our research analysts. Hi, Aman. How are you today?
I'm good, Peter. How about you?
Yeah, very well indeed. Very well indeed. Thank you. So today we're going to be talking about the future of transport with a particular uh, emphasis on what's happening with the coronavirus pandemic, which has fundamentally changed a lot of the ways in which people are transporting themselves around the world. Obviously, we've seen a big crash in air transport, but also the way that people are using forms of public transport and shared mobility. Those have also come into focus because of the coronavirus. So we're going to talk through that, some of the things that we're seeing there, how, for example, social distancing is now being practiced, and what this is likely to change within the overall fabric of the way that people move themselves around, and the impact on the industries of which there will be some pretty fundamental changes. So, Aman, let's start off by looking at how we are seeing car sales, auto sales changing right now. Are people kind of moving back towards personal vehicles away from shared mobility options? What are we seeing right now?
So, Peter, the situation remains very fluid, and there have been, steep declines in sales since coronavirus broke out, and automotive industry on the whole was already, on a decline before the pandemic broke. But yeah, the sales are definitely going down, and the whole subdued economic condition and the negative customer sentiment is adversely affecting car sales. So yeah, on the whole the car sales are going down, and as far as shared mobility is concerned, again people are very much hesitant to board a cab or to share a cab. So there is definitely a need of personal transport and personal vehicle, and governments in many countries are also advocating to use personal transport. But how it will affect, how what impact it will have on new car sales is yet to be seen, and it's quite early to access the market effectively at the moment. So yeah, we are tracking the developments, and we feel on the whole the new car sales will see a steep decline this year.
Yeah, I mean that's it's certainly what I mean the auto sector was very badly impacted, right from the outset of the pandemic. We saw that particularly in China initially, and then it's spread around the world with quite a number of factories, going into extended shutdowns. But when we kind of look back at the pre-coronavirus trend, it did seem that things like shared mobility was beginning to, maybe that was part of the impact on new car sales because particularly in urban areas, the attraction of owning your own car was lessened because of the broad availability of shared mobility. So, you could argue, I guess, that the impact of coronavirus may, in fact, drive people back to personal mobility, but that's not what we're expecting to see this year. Is that what you're saying?
Yeah, exactly. If you see on a long term basis, there is no doubt that shared mobility will continue to grow, and maybe the this change in as the situation improves and the coronavirus pandemic is controlled, people will try, will again move back to shared mobility, because this is a trend that we have been seeing from the last couple of years. And you're right that growth in shared mobility did affect new car sales. So you are absolutely right on that. On a long-term basis, shared mobility growth remains intact.
Okay. So, if I mean the automotive sector is sort of undergoing this, you know, long-term secular change away from the internal combustion engine towards, more electric drivetrains, perhaps more autonomy coming in, although the likelihood of widespread, level 4, level 5 autonomy is maybe still quite a number of years away. Um, but if we look at the real near term, so the next year or two, are we seeing any kind of changes in the business models being adopted by automakers? To try and galvanize sales, after this coronavirus-led slowdown?
Yeah, so automakers have already started to, adopt new business model to push sales. So there are a lot of different strategies that automakers are adopting to push sales. Like they are giving upfront discounts. They are giving 1 year EMI holiday. They are accepting deferred payments, zero financing. So there are a lot of things that automakers are doing to push sales. As you know, the industry hasn't seen such kind of situation. This is the first time that they are experiencing such a situation. So yeah, there are a lot of new, I won't say new business models. So emerging business models are now being accelerated due to COVID-19. So we are seeing, high growth in subscription services. So on one hand, there is a growing need of personal vehicle, but on the other hand, people do not have money to buy a car. So what they are moving towards subscription model, where you don't give a whole lump sum upfront payment, but a very flexible kind of payments you do. So which makes the overall car more affordable. Plus, other thing what we are seeing is a high shift of increasing shift towards digital retailing. Almost all sales which are happening now uh, are happening online. So automakers and dealers are increasing their online capability, and they are using Zoom call, WhatsApp to make car buyers aware of of the vehicle. And there are a lot of third party vendors like cars.com, Vroom, Carvana, which are partnering with these automakers and dealers to make the transition easy. So there is a lot going on that side of like on digital retailing. And automakers are really taking this very seriously. And Mercedes Benz expects 25% of all their sales being digital by 2025. So yeah, these are some of the models that automakers are adopting, and this will only be this will only accelerate. So COVID-19 will only accelerate the shift towards the new business models.
And something which we've seen, particularly in several countries in Europe, is happened. I mean, in the UK, it was very noticeable during the lockdown period. Was a steep rise in people riding bicycles, right? So car traffic was massively reduced, but there was a big rise in people riding bicycles, either for personal transport or just for leisure activity. Um, and this, the rise in particularly e-bikes is something that we've seen over the last couple of years. So there are some big manufacturers in Europe like Axel Group, which is a house of brands, but they reported results last week that were massively up, driven by e-bikes, um, e-scooters, e-kickboards, have been gaining popularity, but many of those have been, or at least on the kickboard side, have been more on the kind of the shared mobility aspect, and I think those will have been affected by COVID-19. But are you seeing the same sort of patterns in terms of what you're looking at? other forms of personal mobility growing?
Yeah, absolutely, Peter. We are seeing these kinds of new mobility options really becoming popular. There are a few reasons for that. First of all, is the work from home culture is now becoming permanent for many companies, and so people require to travel shorter distances, and they require some mode of transportation which is economical and quick, and this is where these e-bikes and e-scooters fits in. And governments are also now pushing uh, these mobility options. They are creating the infrastructure around to make these to make these options work. And yeah, many cities are restricting traffic and widening up the pavements to promote social distancing and to make bike travel safe. So yeah, and you are absolutely right. In many countries there has been increasing sales of e-bikes, and there have been also scarcity of these e-bikes in some countries, and players companies are really taking steps to make these e-bikes more accessible, making delivering it to home. And so yeah, there is a we are seeing high demand for these new mobility options, and people are also now recognizing and acknowledging, they are seeing pollution free environment for the first time. So they are really, there is a whole new awareness about clean environment among the people, so that is also driving the adoption of such mobility options.
Yeah, I mean it's like there was a massive, almost global experiment to find out what would happen if all motor vehicle traffic stopped, and suddenly people discovered that the air is much cleaner and the environment is much better, and they want to retain some of that as we kind of move through this coronavirus and out the other side, hopefully. Um, but I think there is equally a lot of pressure to bring people back into transport and kind of getting them back to work. But something which I saw yesterday was a report from a company that used to be called Regis. They've actually changed their name, but they do shared workspaces. And they were pointing out that there's a higher demand now for office space in suburban areas. So, moving out of city centres towards where people live, which is an interesting trend. But again, that supports your point about the fact that for relatively short distances, let's say up to I don't know 3 kilometers or maybe 5 kilometers, then things like e-bikes or e-kick scooters can work really well in that for those short journeys.
Correct, yeah.
So if we look, maybe at the more at the auto sector, which is a huge industry and has been really badly impacted. So take a look at some of the technologies that are emerging there. And I talked earlier about the move towards electric drivetrains, but also the autonomous and connected cars. So can you talk a little bit about some of the developments that you're seeing in these spaces? Sort of take them one by one. So if we start with electric vehicles, this has been a big kind of growth area, but still, um, even though there's been a lot of emphasis on this, still the proportion of EVs sold globally is still quite small. But do you think that coronavirus will have kind of accelerated this trend?
What we believe, Peter, is that these emerging technologies like EV will definitely perform better or fare well compared to older technologies like ICE engines. So EV sales, like conventional vehicles, has been declining, but we feel that it will be able to have better performance this year compared to ICE engine. And governments are also supporting EVs. Like in China, government has taken some steps, like they have scrapped the vehicle purchase tax and they have extended the subsidies to 2022. And similarly, there is a proposal in Europe, Euro 20 billion proposed package, which includes building up 2 million electric and hydrogen vehicle charging points by 2025. So what we are seeing is that government EV is a very strategic area for the government to meet their overall emission targets on one hand, and also to create jobs and to move the economy. And there is a push from the government, then there is also a push from the automakers who need to bring down their emission levels and comply to stringent emission norms. So 2020 is the target year for Europe to bring down the carbon dioxide emissions per kilometer per car sold. So there is a lot of emphasis from government, from automakers on EVs. So we feel that this EVs will be fastest to recover among all mobility types. And if you see, the quarterly results of many automakers, they have not scaled down. They do not talk to scale down their investment in EVs. So it might be investments might be delayed by a couple of quarters, but we feel that on a long-term basis, COVID will have the least impact on EVs. And OEMs are already trying to secure their battery supplies and innovate on battery technology to increase EV ranges. So EVs will continue to be a good growth area for automotive.
Okay. And in terms of autonomous vehicles, I mean, part of the driving force behind the development of AVs was the shared mobility sector, right? So you had, quite a bit of investment from, companies like Uber and so on that were, keen to push into the EV space, and a lot of Tesla's um, future business models were predicated on the idea that there would be this um, fleet of autonomous Teslas that could be um, you know leased or allowed to become kind of robo taxis. Do you think that because of coronavirus that we'll see a reduction in that drive towards AVs, or is this just a kind of a blip in a pretty long development cycle anyway, and will likely carry on in more or less at the same pace that we were moving towards getting to full autonomy?
So I think this will vary from automaker to automaker. So the front runners like Tesla, Cruise, Waymo. So we feel that they will continue to invest in EVs, and it's because of its strategic importance. But many automakers, many I can say tier two automakers like Nissan and Renault, maybe Ford. So these automakers were already lagging behind the development of autonomous vehicles before the pandemic. They were all already behind their targets. And with pandemic, the focus is on trying to invest in uh, popular vehicles like SUVs, trucks, or tried and tested technologies like electric vehicles. So AVs might take might be a second preference for many automakers as far as R&D is concerned. So they will try to save cost there. But some of the technologies that are already matured, like level 2 technologies, autonomous emergency braking, cruise control, which again is of strategic importance, and which can create a USP for them. and which are already developed. They do not need to, it doesn't require that much of investment compared to level 5. So I think these more of a basic level 2 features will continue to penetrate, and the high level of autonomy might take a backseat due to COVID-19. Mainly because of the cost involved in it and lack of use cases at the moment.
Right. So, trying to kind of wrap all this together and kind of bring us to a conclusion. Can we talk a little bit about the overall kind of outlook here? I mean, we've been talking a lot about future, but you know, what do you expect to see? Maybe more at the kind of strategic level for automakers. We've seen quite a number of partnerships being formed recently, both for in the real near term around sort of the connected car as companies sort of seek to combine platforms, but looking out a little bit further, do you expect those partnerships will extend into the electric vehicle and autonomous vehicle realm? And what's your bet on when shared mobility is sort of back to the pre-COVID trajectory in terms of growth?
Okay, so like talking about the partnerships and alliances. So definitely, this AVs, connected car, EVs, they require huge investments, and so there we are expecting a lot of partnerships and cost sharings going forward. And these partnerships will vary from mobility segment to mobility segment. Some like in so micro mobility, the bigger players with deep pockets will acquire the smaller ones, and for EVs, the major partnership area would be battery innovation and securing battery supplies. And in connected cars, partnership would be across the value chain among telecommunication companies, software companies, hardware equipment manufacturers, and automakers. So yeah, there's a lot of scope for partnership going forward, and we have been seeing a lot of alliances and partnership before COVID, and due to financial constraints uh, among automakers and tier one suppliers due to COVID, these alliances makes much more sense as of now.
Okay, fantastic. And I think that's a good point on which to leave the discussion. So, Aman, thanks very much for your insights today. And for everyone else listening, thanks for joining us on this podcast. If you want to learn more about our research in the in the automotive space, please do check in with us on our website. And yeah, look forward to speaking with you on the next Counterpoint podcast. Thanks. Have a great day.
Thanks, Peter.